All right, fellow AMC stockholders, XMAX Trading here. We're going to go over some pretty amazing DD regarding some downfall, some hedge funds coming up. So it's pretty interesting. So hit the subscribe button if you haven't already. Hit the like button, and let's get started. So downfall of star hedge fund reveals Brazil at a tipping point. As interest rates soar, the appeal of hedge funds is fading fast. Adam's fund has seen assets under management plunge 90%. So this could be a forebearer of what could happen in the future if these hedge funds who are shorting AMC and other meme stocks that they keep paying and paying and paying to hold their shorts. If you have money in those hedge funds, you don't want to be paying that kind of fee. You're not here to fund the hedge fund themselves. So these hedge funds could get their investors could recall their money. Marcio appeal made a splash in high-flying hedge funds 5 years ago, and quickly became a poster child for revolution in Brazil's capital markets. His Adam Marco fund, drew more money than any other hedge fund globally that year. Overnight, Appel became sought-after guru, holding seminars as many as 9,000 eager investors, mainly the middle-class Brazilians, dipping a toe in the stock market for the first time. Traders at Goldman Sachs, JP Morgan, Banco Santander followed his lead, starting their own hedge funds in the hopes of at least doubling their salaries. In the nation's financial circles, the mass shift became known as the Adam phenomenon. Well, I didn't know that. Half a decade later, after a 7% surge in the number of Brazilian hedge funds, the glory days are fading for the $280 billion industry. Assets under management and Adam Marco's flagship fund have plunged 90%. Assets have plunged 90% from their peak amid uninspiring returns. Industry-wide, investors are yanking their money out at the fastest pace since 2017. Smaller firms have combined in an effort to stay alive. More consolidation may be on the way. The biggest change from the go-go days is Brazil's benchmark interest rate has soared to 7.75%, with traders pricing in a peak of 12% by 2023, meaning investors can score fat returns just by buying low-risk government bonds. So that might happen in America, right? If the interest rate goes up, stocks fall, could you still earn a really good interest rate from the government? But, our government to have a 7.75 or 12% or even a 12% interest, that's crazy. That's like 1980s. Meanwhile, forecasts for lackluster economic growth and political volatility as President Jair Bolsonaro seeks re-election have sent investors to seek safer options. Added to the high fees that hedge funds charge, not to mention middle performance for most of them, it's becoming increasingly difficult to justify that type of investment. Investors are getting scared and jumping out of high-risk funds. Finance professor in Sao Paulo, Brazilian investors have anticipated next year's turbulence, have gone back to fixed income, which is in their DNA. Makes sense, right? You want to be safe. Free-falling investors are withdrawing their money from Brazilian hedge fund Adam. Boom, boom, boom. So I think a lot of investors, they sought out hedge funds when you had the low interest rates from the Fed, right? Or any other government, whether it be in Europe or whatever, they're seeking out higher returns using hedge funds. And now that the governments may be ramping up their interest rate again, it's better off with fixed income. The sea change is upending Brazil's financial industry. Investors shift to fixed income securities bound due to debt revenue, making it hard for hedge fund operators to retain the talent lured away from banks over the past year, probably trading fixed income. While a hedge fund charges a 2% fee on assets under management plus a 20% performance fee, credit funds charge 0.8% on average without any kind of performance fee. For Adam Capital, a shakeout has meant his flagship fund now only holds 1.2 billion reais, 216 million of assets, down from 12.7 billion, down from almost 10 times, right? So he could have 2 billion under management. Now it's 216 under management. That's a shrinkage. Over the past year, it's posted more outflows than a group in 24 similar hedge funds in Brazil. Adam Capital may be the most striking case, but isn't alone, seeing money flow out the doors. Funds like JGP Strategy and Kina Kronos have seen holdings drop by more than 3 billion reais each. They share a common narrative. All had growth spurt in recent years, followed by lackluster returns. While the process of financial education has evolved a lot in Brazil, in the day, performance is what counts the most. Performance. Right, Citadel? And so Nelson, who covers local hedge funds, they blew up number of funds, and now some of this heyday is coming over. Performance of Adam Macro Fund started off strong, beating most peers, but returns have fizzled. From 2016 to today, the fund is up 58% after fees. while returns for the benchmark risk-free deposit have totaled 44%. In the same period, basket of peers is up 61%. While the added macro fund debuted early 2016, Brazil was going through the worst recession in its history. Brazil in 2016 was going through its worst recession. Then President Dilma Rousseff, in the middle of an impeachment trial, interest rates were at 14.25%, the world's highest. Amid the turmoil, once in duration shift was taking place in the local investment industry. For decades, hedge funds in Brazil were only available to ultra-rich, and so through bankers and wealth managers with high minimums. Then came XP Incorporated, a group of retail-focused brokerages inspired by Charles Schwab. They started offering products to the middle class. They called themselves financial supermarkets. Adams Capital was the first one to catch the interest rate starting to come down in 2016. So it's kind of interesting how hedge funds will play off the interest rates, It's not just timing the benefit, but also Apple's past credentials. Apple's. After leading investment manager, he moved to Sao Paulo. During an almost 5-year stint at Safari, in 2015, it soared 200%, so 4 times. He built their reputation. Next year, he created Adam Capital alongside former colleague Andre Salgado. Started off strong. Performance was somewhat disappointing. However, hedge funds have delivered better returns. Officials have declined to comment, and he knows the challenges. The truth is, only a few businesses are as good as the business of having your own asset manager. The toughest part is delivering returns over a long period of time. The big question now is how many hedge funds will last. Around 60% of those that exist in Brazil in 2010 aren't around in 2021, so 60% are gone. Hedge funds started to post outflows, a lot of outflows going on. So hedge funds, fixed income, outflows were, October 2020, we're into 2021. So some inflows here. Now we're dealing with outflows. That's in pink, not red, huh? Among those that survive are firms that are consistently able to make money. All right, well, looks like Bloomberg has cut me off here, but so pretty interesting, guys. I think more hedge funds could be in America. High interest rates could happen here, and that could really, really dent, hedge funds, and it could lead to hopefully leads to some sort of short squeeze. So, because then all their other assets have gone down, they own a lot of shorts on AMC, GME, whatever. So they could be forced to get out. All right, guys, till next time.